So let's talk about the post-closing trial balance, which is the last step in our accounting cycle. So if we go to our accounting cycle, this is where the post-closing trial balance takes place. So it's after the closing entries, we just prepare the post-closing trial balance, and then we're done with the accounting for that period of time. Okay, now let's get to the question. So if you notice, I've opened the same question that we solved for the closing entries, because of course post-closing trial balance is made after the closing entries for a reason, right? Because we need the closing entries to be able to make it. So I'm going to make the trial balance here on the right side, so it's like very easy to follow everything. I guess I need some more rows. Let's do that. Okay. So we'll name this one description, and then debit and credit. And of course, we are preparing the post-closing trial balance, so let's also give it a name. Post-closing trial balance. Now, just to give you a concept, this is basically post-closing trial balance basically is prepared to show what the trial balance looks like after we have closed all of the temporary accounts. Means, if I remove all of the temporary accounts, what will the numbers look like? What will be the remaining accounts that I have? So in this case, cash will remain the same, since it's not a temporary account. We did not close cash, it's an asset, and we just keep going this way. So it's like the easiest part of the accounting cycle. So you just like copy everything from the adjusted trial balance that if you're given an exam, you'll be provided. And yeah, that's all there is. Just keep mentioning the permanent accounts, which are assets, liabilities, and equity. And if you find expenses and revenues, just ignore them. Don't write them, right? Because we have closed it by now. We just closed these temporary accounts. Okay. So after supplies, we have prepaid insurance, 5,500, and then we have equipment. Okay. Now, if some accounts, some accounts don't look familiar, don't worry about it. We are doing this full question just so conceptually you are good. So like if you don't know what certain account means, ignore that, right? If you haven't covered in our course, not a problem. I'm just trying to show you a very good question of post-closing trial balance. So notes payable is 50,000. Okay. Accounts payable, it is 25,000. Interest payable, 500. Unearned service revenue, which is a liability account, of course, 8,000. And then salaries and wages payable, which amounts to 6,000. And then common stock, which is 100,000. Dividends, we already closed that. We just discussed it's a temporary account. Service revenue, we discussed temporary account. All of these expenses we also discussed. These are temporary accounts, so I don't need to mention them. But there's one thing you need to remember. If you notice, we don't have the retained earnings account in this set of data. That means we can assume that retained earning is zero, at this point before this accounting period. So if it was zero before this accounting period, which can be for many reasons, probably it's like this is the first year of the business, so they haven't made any profit before this accounting period. So no worries, we will write the retained earnings ourselves. And as we know, retained earning is the account that contains the profit that has not been paid to the shareholders. So let's think about what we did to retain earnings in our closing entries. So if you notice here, first we increased retained earning. How do I know it's an increase? Because it's equity account, it increases on the credit side. So if I increase it by 33,000, then I decreased it by 5,000 because I paid dividends, and when you pay dividends, your profit the retained profit that you have in the business obviously goes down because you just paid it out to other people. So it will be 33,000 increase minus 5,000 decrease to see how much we are left with. So let's see. There we go. Now we are done with the post-closing trial balance. Always do the total to see if the debit is equal to the credit. It should be equal if you've done it correctly. So let's see. Yes. So now this means we have solved our post-closing trial balance flawlessly. I hope you saw it's very easy. It's like literally just copy paste the adjusted trial balance and remove the temporary accounts. Like that's all we're doing, right? With the exception of course, in retained earning you have to like make a little bit of like a difference. But everything else is like copy paste and remove the temporary accounts. That's all that is, right? So yeah, I hope the course has been very helpful to you. I tried to make it as easy as to the point as possible. I didn't include any extra things that you don't need to know just to make the course look fancy and like so it has like so many hours. No, we stuck to the point. We made it tactical, right? That's the goal. Learn the things that you need to learn to become great, and ignore the things you don't need to learn, even though they might sound like some great important thing. So yeah, and I would like to say from the bottom of my heart, thank you so much for enrolling in this course. I really appreciate like you staying in this journey with me, and hopefully you can like after this course you'll also like look over my other courses and see what I am providing, because I'll do the same approach, right? I'll keep everything to the point and exactly what you need. So thank you.